Welcome to today's podcast. My name is Andrew Wilkinson, and I'm joined by Dan Basse, CEO of AgResource over in Illinois. Today's episode, we'll be talking all about crop progress in the Midwest. Dan, welcome. How are you?
I'm really well. How have you been? The summer's gone too fast, but other than that, it's all good.
It's definitely cooling down here as we record this in the first week of September. Dan, tell me, first of all, conditions have been what you might describe as perfect for the 2024 harvest. But in itself, that creates bad news for farmers, doesn't it? Can you describe the crop progress for the audience, please?
Yeah, no, it really does. When we look back in the key two growing months for the U.S. crops, and I'm now talking about corn and soybeans and sorghum, our principal row crops. It's really July and August, which June, July, and August are the three principal months. But June and July are really the key. The U.S. was the second warmest on record, but it was warm on each coast, the east and the west. In the fat part of the central U.S., we had temperate conditions. And then we got very fortunate. We got a hurricane named Beryl that barreled up the Midwest, the Mississippi River to be exact, and it gave us just the right amount of water at the right time as corn was reproducing, and set us up for a record U.S. corn and soybean yield. So it's a bounteous year. We're looking at big crops, and Mother Nature was really a big part of it because we had this stagnant weather pattern, which produced mild temperatures and mostly good rain, though it's getting a little dry now, but that's okay heading into harvest.
Great conditions, bounteous crops and harvest means lower prices, but that's not the only influence from the supply side, right? What about events outside of the United States for US farmers? I'm thinking here about the success of Brazilian crops, maybe flooding the markets, and how China might be less reliant on US exports. Talk a little bit about those external factors for the audience, please.
Yeah, no, you're right. Again, Brazil did have good crops last year also. They've got multiple crop seasons in Brazil. So it's always a little hard to say each year. But nonetheless, when you think about Brazil, it is a keen competitor of the United States and the United States farmer. And then I think what you're highlighting is this thing called a duopoly in world power, where it used to be the geopolitics of the world was centered on Washington, D.C. And now it's Beijing and Washington, D.C., and there's this competitive influence between the two of them. China is the world's largest food importer, taking about $234 billion last year. That's of 1.4 trillion in total trade. And of that, 10% of that came from the United States, or a little more than that. And so they were our largest agricultural customer. Boiling it down today, China's gone to Brazil. And so the BRICS, if you will, Brazil, Russia, India, and China are getting somewhat stronger on agricultural trade. And China is now focusing a lot of its corn demand and soybean demand on Brazil, leaving U.S. farmers with less demand. Mexico's come along to some degree to help us out, but not enough to really replace our biggest customer named China.
Just put that in perspective in terms of prices. Where are prices for those key crop products, Dan?
Yeah, so today the corn market in Chicago fell to a new 4-year low. In other words, we haven't been this low since the pandemic started back in 2019, below $4 a bushel.
Mm.
Chicago futures made it down to about 360 or $3.60 a bushel. And in terms of soybeans, also the same case. We fell below, $9.50 a bushel. Have not been this low looking backwards at 2019. And so the demand in terms of U.S. ag trade is meaningful. USDA just came out and said that at least the U.S. had a trade deficit, ag trade deficit of a record large $42.5 billion last year. If that trade deficit was back to where it should be, which is a positive, we'd have crop prices that would be far higher. Corn would be back above $5, soybeans back above 11, and the U.S. farmer would have a big crop at a reasonably good price. Unfortunately, that's not the case as we head into the harvest today.
Dan, just talk a little bit about the cost side of the equation, things that farmers have to pay for. I'm thinking of labor, seeds, and fertilizer, and so on.
I was at a big farm meeting yesterday, and that was the big topic at the meeting, which is the price of a John Deere tractor, hundreds of thousands of dollars. The price of a John Deere or any combine for that matter is $500,000. And so agriculture is a very capital intensive business when you consider farmland selling at $10,000 to $20,000 an acre and all the inputs that need to go into a crop. If I kind of back it out and look at where the U.S. farmer is this year, his break even cost on a big basis or a nationwide basis is about $4.69 a bushel on corn. So a price of 470 in Chicago would indicate that farmers are losing about $1 a bushel on corn. In the case of soybeans, we think it's about $11.90 a bushel. So prices in Chicago of $9.90 a bushel would give him about a $2 loss. And these are the kind of disastrous decisions that are going on in the ag economy. And as you think about the farmer, it's not a good year. He's trying to figure out how he's going to make it through to the next year and where he can trade down or cut costs for the 2025 crop. Farmers are not happy at the moment, just relative to market conditions. And a lot of that's related back to trade, but also the bounteous harvest he's going to have this year.
And anything on seed costs and fertilizer costs? I mean, we've still got the Ukraine-Russia
Yeah,
conflict going on in the background as well, right?
we do have Russia and Ukraine in the background, but U.S. seed costs are estimated by the American Seed Trade Association to be up about 8% this year. Fertilizer prices are estimated to be up 4 to 7%. Some of that is related to China no longer exporting a nitrogen source called urea and also cutting back on phosphate exports. China was a big supplier of phosphate to the United States. And so, putting it all together, this geopolitical squeeze of the competitiveness between Washington and Beijing really plays out in many sectors on the farm, both from the fertilizer side of it, a little bit to seed, as China's now, of course, adopting GM seed itself. And then, of course, looking forward to the actual imports and where China buys from.
I read earlier this year, or read that the University of Illinois earlier this year calculated farmers in the state of Illinois are projected to lose $118 per acre of
Yeah.
planted corn and $81 per acre of soybeans. February, USDA projected a drop in farm income of a quarter from compared to last year, unless prices improve. So it's pretty dire out there.
It really is. I don't want to diminish it. When you're losing $100 an acre on average between in corn and soybeans, and I think the Illinois figures would be a little larger now, it's a pretty tough situation. And it's not only today, but what do farmers do to manage either costs or their margin going forward? So the only good news in the background of all of this is it's not only domiciled on U.S. farmers, Brazilian farmers, even with their weakening currency of the real,
Hmm.
are also losing money. So we calculated at around 1,500 real, the Brazilian farmers losing not as much as the U.S. farmer. That'd be about $47 an acre. But nonetheless, it still is a loss. And so this is a global phenomena, if you will, in farm income. Everywhere we look, whether it's Europe or the places like Latin America or the United States and even China, crop prices there are not well. And so with that, China is not importing, or at least telling its importers not to buy much corn and less soybeans to make it through to the next cycle.
How far can prices keep sliding? Is there a floor here, Dan? Will farmers ultimately switch to less fertilizer intensive soybean crops for next year and that then cause potential shortfall in corn crops?
Yeah, no, that's the discussion of the farmer, which is where does he trade down to? Can he find non-traded or cheaper corn seed or soybean seed that's more conventional? Can he trade down and maybe use less fertilizer? Can he go to his landowner and say, can I pay you a lower rent? These are all kind of the discussions. And of course, he's probably not going to be buying that John Deere tractor or combine at least this year. Maybe he leases it. So those are the discussions that are ongoing, but it's still hard with the markets where they're at to pencil out a profit. So USDA was out today and they did raise farm income a little bit, but it's largely due to the species, the dairy industry, the livestock industries
Hmm.
that benefit from lower feed costs. It's not the grain farmer specifically.
Dan Basse, CEO of AgResource in Chicago, thank you very much for joining me today.
You're very welcome.
And to the audience, don't forget to look out for more podcasts from wherever you download your podcasts. And don't forget to subscribe if you like what we do. Thanks, everybody. Bye for now.
The analysis in this material is provided for information only and is not and should not be construed as an offer to sell or the solicitation of an offer to buy any security. To the extent that this material discusses general market activity, industry, or sector trends, or other broad-based economic or political conditions, it should not be construed as research or investment advice. To the extent that it includes references to specific securities, commodities, currencies, or other instruments, those references do not constitute a recommendation by IBKR to buy, sell, or hold such investments. This material does not and is not intended to take into account the particular financial conditions, investment objectives, or requirements of individual customers. Before acting on this material, you should consider whether it is suitable for your particular circumstances, and, as necessary, seek professional advice. Futures are not suitable for all investors. The amount you may lose may be greater than your initial investment. Before trading futures, please read the CFTC risk disclosure. A copy and additional information are available at ibkr.com.